kind introduction, and also many thanks to inviting ICIS to share our perspectives on the polymer market. As you all are very well aware, we have been through a very turbulent period for markets, not just in India, but also the rest of the world. We've seen prices moving down and then again back up to record highs, and more recently corrections actually setting in. So whether this trend will continue is a question mark, given that there are still many uncertainties in the market. And that's what we will be exploring over the next 1 hour. So I have Veena, who will discuss the polyethylene and polypropylene markets, and Damini, who will talk about PVC. I'll come back at the end to talk about ABS, nylon, and polycarbonate. You will find that there are some common factors that have been shaping markets over the last year. And you could almost say that a perfect storm actually hit the global polymer market. The triggers have been both on the demand side and the supply side. And crucially, logistics has had a heavy impact on trade and therefore also on the markets. So if you look at demand and go back a bit in time, go back to the second half of 2020, when economies around the world, including India, started reopening after the first round of lockdowns. This resulted in some very swift recovery in demand. And you could almost say that the pace was much faster than expected. The pandemic did lead to some unexpected changes in consumer behavior. This could be anywhere from greater requirements for takeaways, which boosted packaging demand, or work from home, which meant consumers were investing in equipping their homes to create a better working environment, which led it to a boom in sale of furniture or computers and other electronic devices. In the US, we saw the stimulus money being used by people to spend across a wide number of consumer product categories. On the supply side, we had that freak polar storm hit the US Gulf Coast in February, which resulted in plants shutting down and force majeures being announced. It's not that far back, but in case you've forgotten about it, in February, we actually saw about 80% of US propylene capacity and close to 70% of ethylene capacity being taken offline. And derivative production was also hit, with 90% of PP production and 73% of acrylonitrile output affected. So the scale of disruption was such that the impact spread very rapidly across the world, including Asia. And then there was also the usual turnarounds that take place regularly through the year. To complicate matters, then you had logistic issues that escalated this year. A breakdown of supply chains led to a dislocation of containers. Add to this port congestions, resulting in delays in shipments, both by sea and also inland shipments. So freight rates have skyrocketed on many routes. And although we've seen some moderation in recent weeks, this still is a very important factor that's played a key role in shaping prices. So we will be exploring all of this in reference to those individual polymer markets. Let me pass you on to Veena, who will now look at the PE and PP markets. Over to you, Veena.
Thank you, Malini. A very good afternoon to everyone who's called in for the session. All right. So I'm going to set a bit of context to what has happened in the world of polyolefins, particularly in Asia, before we dig deeper and look at some of the factors that have impacted prices. Now, here you see in this price chart is just a simple trend in PP prices in India versus that of Southeast Asia and China. Now, historically, India has always looked to China, looked to Southeast Asia for direction to make sense of those numbers. And this year, it has actually become more difficult to make sense of the numbers that we see in India as compared to that, emerging in China and Southeast Asia. Now, if you dial back to earlier this year, the polar storm, it was probably a defining moment for markets worldwide, because the kind of impact of this polar storm was unprecedented. Perhaps we haven't seen that kind of an impact on a global scale. Now, what happens is it did wipe out a lot of PP and PE production in the US, and because of which view US turned an importer of PP for some time. So for a market which was not importing much of PP, started importing PP from all corners of the world. And it continued for a good 2 or 3 months. Now, what happened was in earlier this year, we started seeing PP prices, go up to record highs in India, in Southeast Asia, in China. So because there was no cheaper PP coming from anywhere, the Middle Eastern producers were all diverting their volumes to the US, to Latin America, because of very strong netbacks. And as a result, all other markets had to pay a very high price in order to get some allocation of material. So what happened was, all three markets started going up. Now, this period was soon followed by a period of sharp declines in PP prices. And this was the time when Chinese exports started flowing into India and other parts of the world. So what happened was, with local demand in China staying weak and not really picking up to the extent that people expected, a lot of these Chinese PP plants started placing material outside. And South Asia, Southeast Asia were the natural markets for this material to flow into. So if you see, a lot of material started coming India's way, so around May and June early this year, and that did put a pressure on Middle East prices, because India almost bought very little from the Middle East, and was able to meet all of its import requirements from China. And this was a trend not just in India; it was a trend in Bangladesh, in Pakistan as well, uh, similar to what we see in Southeast Asia. So this capped any significant uptrend in prices. Now, if you cut to, say, July August period, things are a bit different. Now, in this period also, you see Southeast Asia and China demand is nearly not very strong. At this point in time, a new wave of restrictions due to increased coronavirus infections have actually put a lid on demand in Southeast Asia and many countries in Southeast Asia, and demand has really not picked up to a pre-pandemic level. Uh, and in China also, we don't see a lot of demand for imports. We also don't see a lot of consumption uptick just as yet. Now, while that is happening, new capacities of PP are already starting up in China. So all this material that is coming out from local plants in China has to find a market, has to find a home to sell to. The problem is, it is not easy selling to India or Pakistan like it was earlier in the year. And this situation is all brought about by the logistical challenges. Now, earlier this year, Indian PP buyers were able to source material from China actively. But it has become all the more difficult in the second half of the year because of very high freight rates, because of a lack of container availability, because of that, shipping times have become very uncertain. Voyage times have become extended. So, to give some kind of an example, in mid-November, buyers are being told that if they choose to ship, book a cargo from China, the last date of shipment is not before 31st of December. Now, this cargo is going to arrive sometime in January. So in mid-November, you as a buyer are forced to look at a cargo arriving in January, where you have very limited idea. And like Mr. Goel said, earlier, that prices have become so volatile, they're changing so frequently, that as a buyer, it's become more difficult to take that kind of purchase decision. So what we are resulting it with is, although prices in Southeast Asia and China are lower or relatively lower, India is having to pay a much higher premium because, one, there's not much of availability from the Middle East, because Middle Eastern sellers continue to see very strong netbacks in some of the export markets. And two, China is not an option as such, or as easily viable option as such, because of the freight complications. So that is why we see, a bigger premium that India has to pay in PP over China and Southeast Asia. Now, there has been some uptick, in the recent months in Southeast Asia and China PP prices, mainly as a result of, China's dual control energy policy and the restrictions that have been put in place for some of the manufacturing units there. But these have not really sustained over a period of time, because some of these restrictions have begun to ease. Some of the plants have also restarted. And with demand staying slow, there's only so much time that prices are seeing that upward support. So this is the kind of trend that you see, that although we saw some gains, that momentum in prices going up also was lost. Now, earlier we compared India PP prices with China and Southeast Asia. Now, this slide just gives you a perspective of where Indian PP prices are in context with the rest of the world. And in this slide, the blue color worm in dotted lines represent the Indian prices. And what you will see here, that although India is at a higher premium over China, over Southeast Asia, the prices that we see in India for PP is much lower than what you see in most other markets. And here I'm comparing it with North Africa, with Egypt, with Turkey, with Pakistan, with Europe, and with the US markets. So if you see, although India is, yes, it is much higher than what we see in China and Southeast Asia, India market prices are still much lower than most of these global markets. And these are the markets where the Middle Eastern PP sellers are now focused on. They continue to see good demand because of a post-pandemic recovery in consumption, and they see very high prices, much higher than these markets in Asia, because Middle East becomes their only source of PP when nothing from Asia is viable due to freight issues. So these markets are paying a higher premium for Middle Eastern material, because of which Middle Eastern producers are also focused on those regions. Now, one thing to note is that the Chinese export offers, we saw a lot of export offers from China in the first half of this year, which is not the case in the second half of this year. Earlier, in the first half of this year, China material was going to almost all the markets. There were buyers for Chinese material in Europe, in Latin America, in US. That trend has now changed because it's not easy for Chinese material to move out of Asia because of the shipping and the logistic challenges. And that adds further pressure on prices in China, on prices in Southeast Asia, which is keeping a ceiling on the uptrend. Now, before we move to the prices and look at the China market, in a close angle, we can just quickly summarize what are the drivers that have emerged, that have impacted PE and PP prices in China, which is a main driver market for most markets worldwide. If you look at supply is a crucial driver, simply because a lot of the PP capacity that has come up in the last couple of years has been in Asia, and most of it is concentrated in China. So a lot of new capacity increase has happened in China, basically on coal-based producers. And these coal-based producers have also, have seen a volatile run when it comes to operating rates. They were ramping up production earlier this year when the capacities were starting up fresh. Then they had to cut operations or shut units down when the energy policy and the regulations were tightened. Then again, now that the regulations are easing a little bit, we see operations being ramped up. So there has been an impact of the supply of China PP, and then the production of PP in China also impacting prices. Then we look at demand. Yes, COVID restrictions is one of the direct factors that has affected demand. There's a lot of festivals and demand consumption surrounding these festivals that tend to impact uptake across Asia. The futures market has become very volatile as a result of all the upstream movements, as a result of the inventory buildup in China. So what happens with futures market is this affects sentiment a lot. So a lot of speculating and trading also happens. And this papers market, what happens is, although it doesn't impact directly the import prices, it has a direct bearing on domestic prices in China. So the futures market prices affects the domestic prices in China, and the domestic prices in China then affects the import prices. So it has that kind of a ripple effect. It also has a direct effect on buyer sentiment, on seller sentiment, especially when inventories are high and they see the futures market weak. All the traders want to do is just sell off stock overnight, and suddenly overnight you see in the Chinese market a lot of traders looking to liquidate material. So then the futures market then tends to have an impact on prices in this manner. Of course, the fourth factor then becomes a policy. A lot of policy regulations are changing in China with regards to energy consumption, with regards to the recyclability of material, what kind of recycling regulations are being put in place in Asia, in China. So this then also becomes a driving factor for prices for polymers. Now, if I'll take a close look of Asian PP supply, we know last 2-3 years, we know US has been leading on the polyethylene front, ramping up PE exports. Now, when you look at PP, all the capacity expansions are happening in Asia. And in 2021 alone, until we have seen a 9% increase in capacity expansion over 2020. And 2020 was also about 8% or so higher than 2019. So on one hand, we are seeing demand getting that impact of consumption being hit by pandemic restrictions and then lockdowns yet again. And on the other hand, you see, capacities ramping up operation rates and trying to sell material, new producers entering the market, trying to market their material across different geographies. So that is also impacting prices. This table on the right just gives you a snapshot of how much of capacity is coming up in Asia in this year alone. So, of course, China leads the way with the maximum PP capacity expansion, followed by South Korea and then Vietnam. And because of freight challenges, a lot of this material tends to remain within the Asian region and is not able to move out to other markets as easily as it was earlier. Now, taking a closer look at China's story, I mean, with all this new capacity expansions happening, it is no surprise that China PP imports have fallen over a quarter. It's fallen over 26% year on year. And I think this trend, we continue to see this trend, every year, every month, we see China inching closer to self-sufficiency, which was an objective that they had set out earlier. If you look at the prices, of course, it is definitely, there is a very limited incentive for buyers to procure imports. It becomes much more better for them to get competitive domestic cargoes. Earlier, we used to see Chinese PP producers more dominant in the raffia injection space. Now we are seeing these new plants also foray into segments like non-woven fiber and BOPP. So these are new grades that have started coming actively from the Chinese PP facilities as well. Of course, it's not surprising that China's PP exports have surged massively this year, and over a 230% increase in exports in the period of Jan to September year on year. Figures for October are still not available. So this mainly takes into account the volume figures until September. So yes, in the months of March, April, May, the exports were at a record high. And we have not been able to see that kind of increase in the second half of the year because of logistic constraints and shipping issues. Had there been easier movement of this material, we probably would have seen a lot more material going out of China into different markets. Now, if you look at the destination-wise region, yes, Vietnam, India are the two biggest markets, followed by Turkey for the Chinese PP exports. Of course, in the second half of the year, India has fallen, lower because of the freight issues, and Vietnam continues to remain strong. It is one of the biggest markets for Chinese PP because, geographically it is very close. Voyage time is much smaller. So Southeast Asia and South Asia become, the natural markets for Chinese PP. So we do think that once, the shipping issues, the logistic challenges start to ease sometime next year, we should see a lot more of material from China and Asia, other Asian markets come into India. Now, this is just a snapshot of the impact of the dual control policy in China. Now, this is different plants have had different shutdown periods because they were forced to take, cut operations or completely shut their unit because of the restrictions in different provinces. Now, this is the total annual capacity of the year, but most of these plants listed here have had to either cut off or shut down completely. So that has definitely cut Chinese PP supply in the months of August, September, and October. But it has done little to actually, lend any upward support to prices in China, because what has happened is, all this China's tightening of energy policy, what it also resulted in is very high coal prices. But as we approach the winter season, the government intervened to regulate the coal prices to ensure availability for heating demand during winter. And what happened was the moment government intervention came in, there was a huge sell-off in local markets. So what happened was immediately prices could not sustain that uptrend. So PP, although it drew some limited support due to the supply cuts, it was not sustained over a longer period of time. Now, if we shift focus to PE, what you see is, unlike PP, where the application of PP is more diverse into different industry segments, in polyethylene it's more weighed or weighed towards food packaging. And food packaging as an industry or as a segment has done fairly well across the world in the era of the pandemic. In fact, it in some markets, in some regions, in some applications, it did perhaps it netted very strong growth. Some very record level improvement growth was seen in some food packaging applications through the pandemic period. And packaging is still the key application for PE, unlike PP, which has a more diverse set of applications. The demand for PE remains fairly stable. And other applications, other industrial packaging or molding sectors continue to see challenges because a lot of these segments are still not back to activity at pre-pandemic levels. So because of which we don't see uptake in a lot of other products. But when it comes to film, PE film in food packaging, we are seeing very good demand. I mean, demand is coming back. Processors continue to hold very limited stocks because last 1.5 years, there has been a difference in the way people have bought material. They don't see, because of the volatility, because of the fluctuations in prices, converters also don't see the need to build stocks at their unit. So and another problem that has also emerged is cash flow constraints because of the very high resin prices that we have seen this year. A lot of money gets tied up in working capital. So it has a bearing on one's purchase ability. So how much of resin one is able to buy is also dependent on the cash flow position at that time. So this cash flow risk constraints has also had an impact on the inventory level that a lot of processors hold today. Now, if you look at the Asian PE markets, and here we are summarizing, we're looking at Asian PE markets as a whole, India, China, and Southeast Asia, because the trends that we see emerge across the regions are more or less similar. Now, across Asia, there is a cost pressure because crude prices are not low by any means. Crude output cuts have driven up prices. There are also some feedstock shortages, such as associated gas from the refineries that are lower when crude output cuts take place. Ethylene naphtha prices spread has been pressured by, naphtha is going up on one hand, tracking crude, but rising C2 capacity has actually put a ceiling on the ethylene prices. So the spread is getting skewed. Producer margins are under pressure, because of which, producers are forced to maintain polymer prices at a certain level despite demand conditions. Now, if you look at the supply front, US is still missing from the export scene. I mean, it was sometime in 2020, mid to late 2020, that we saw back-to-back hurricanes emerge in the US. And since then, the US market that, they went out of exports, they're still not back. Now, we do expect US markets to come back, to exports sometime next year. But I think more of 2021, we have already, seen US staying out from the export region. Asian, Middle Eastern plants are shut for maintenance. So we have seen some cuts in facilities in Asia, in Middle East, some planned, some of which was unplanned. So some of which was due to a feedstock shortage in ethane. So all of these reasons have driven, have also supported PE prices across Asia. And some Asian producers have had limited choice but to reduce PE output and sell C2 because of poor margins. So especially Asian producers who do not have too many markets as options to sell to are one of the first to actually do something like this, because you, on one hand, you're not able to move material. On the other hand, you see C2 as an attractive price. Then they just take a call and sell ethylene instead of PE. And of course, higher netbacks to other regions. We have seen better prices in Turkey, better prices in Africa, because these are very big markets for US PE material. So when they don't get material from US, they look to Middle East, and these markets are able to offer a much better price than Asia. So a lot of the material from Middle East is then moved to these markets because of the netbacks. And when you look at demand in Asian markets, yes, a lot of workplaces, schools are yet to resume, to pre-pandemic levels. There is a lot of talk that, offices should reopen, schools should reopen sometime next year. But as of now, that consumption for household plastic packaging products has still not taken off the way one had expected in 2021. So that has definitely affected consumption. Pandemic related restrictions have been lifted late in the second half of this year. So it's not that consumption has not recovered, it has, but it has not recovered at the pace at which one would have expected it would. And converters have started restocking. They have increased output rates to prepare for this improved consumption in the, towards the end of the year, the holiday season. And in India also, we saw a good demand emerge after the official announcement on the extension of the BIS, implementation deadline. So because people had actually put off purchasing, on imports front, and then, demand had recovered by then. So once the formal announcement came, Indian importers also became very active looking for PE material, but were not able to get hold of enough cargoes because of, limited availability as such. And then Middle Eastern producers focused on other markets. This is just a snapshot of how the supply in the US has panned out. Now, this is just since March 2020 until November, the extent of outages in the US. Now, if you look at US alone, about 955.9 KT has been lost due to unscheduled shutdowns, and about over 470 KT of scheduled shutdowns. And this has had a direct bearing on PE exports from the US. HDP is down 27%, LLD 17%. US is a big exporter of HD and LLD. LD, it doesn't export as much, but even on LD front, the total export stands at about 1% lower. These figures are for Jan to September over a similar period last year. And because of the feedstock cost push, the absence of US exports, it comes as no surprise that prices in Asia as such, China, Southeast Asia, India, all of the markets have generally seen a gradual uptrend. There have been peaks due to the polar storm. There has been a sharp decline after that. But if you see from November last year until November this year, overall you see an uptrend. So prices today, that the PE prices that we see this year in November are higher than what we saw in November last year because of these myriad of factors. Now, just to summarize, all of the things that we have spoken as of now, and to take a look on how the outlook looks like, for PE and PP. We do expect demand to come back, especially in Q1 next year. We're already started seeing signs of good recovery in demand, but this tends to be more fragmented in the case of PP. Some sectors are doing better or recovering faster than some others. So because of India being a big exporter of, raffia-based applications, this sector tends to recover faster. But a lot of the demand for houseware or injection molded products is still slow. But there is a lot of optimism that consumption for these, of these products also should recover by first quarter of next year. Food and hygiene packaging applications will continue to see strong demand, and we should see good resin uptake for both PE and PP on this front. If we look at supply, Asian PP supply will remain ample, but until such time that the freight challenges will ease, it will be that much difficult to get hold on this material. But Asian PP is here to stay. Once the freight issues ease, it is going to be a lot more easier for Indian buyers to source material from China, Korea, South in PP supply on what kind of material comes in and how they perform. So that will be there. And prices to Asia, of course, will be driven by netbacks what is a net back in other markets that suppliers can get. Um, so we'll have to continue to monitor how markets like Africa, markets like Turkey perform, because a lot of times these markets are also going to be, attractive for Asian sellers. There are some free trade agreements such as, Korea and Turkey that are in place. So Turkey will also be a market that Korean sellers will want to keep an eye out for. So prices too, it's good to look at the Indian prices in context with what Africa is operating at, or what Turkey is operating at, along with Southeast Asia and China. And of course, we are expecting the USPE exports to pick up from the first quarter of next year. As of now, there are some stray offers for USPE exports coming in already into different regions. But because they load in December, the arrival is only by late Jan, Feb. And this is also subject to possible changes in shipment times and a lot of loading considerations and laycans. But nonetheless, we should see a lot more material flowing out of the US, which will then give restore that competition that we had, or we used to see with the Middle Eastern PE. And then hopefully there is more access to PE everywhere. And then that ceiling that we see, that the prices, that the level at which PE operating, we may see some impact on improved supply. With that, I come to the end of my session, and I will now hand over to Damini to
Thank you, Veena. Hello, everybody. My name is Damini, and today I'll be speaking on the Asian PVC market. So let's first take a look at the global PVC market to put everything that has happened in India over the last couple of months into context. So let's start with PVC demand in Asia. Region-wise, Northeast Asia is the largest consumer of PVC in the world, and this is driven by China. In the Asia Pacific region, India is the largest PVC importer, so it's a very important market, and it accounts for about half of the total Asian consumption. Over the last year, Indian PVC has seen some improvement after it declined about 7.1% in 2019-2020 due to the impact of COVID-19. On the supply side, there were many outages this year that we saw in the US, and this was mainly due to extreme weather related events, like Veena mentioned, due to the snowstorm, due to hurricanes that happened. In Europe, supply remains tight. There are a number of producers, number of plants like Vinova, Innovin, Vinolit that are still, have force majeures going on. So supply is still tight from Europe. And as a result, India will be dependent on South and Northeast Asian cargoes, at least until these deep sea imports are back. Next slide, please. Okay, so now let's look at the China PVC market. China's PVC market is a very influential one, especially in Asia. So firstly, because China has a huge PVC capacity, this year it stands at 29 million tons in 2021, and 80% of this total capacity is carbide-based PVC, particularly because of China's abundant coal reserves, and it also has a number of standalone carbide-based PVC plants. In 2021, China has been a net exporter of PVC, and its capacity is expected to rise to 30.5 million tons by 3.4% next year. Another reason that China is so influential in the PVC market is because of its policies. This year, we saw the dual control policy come into effect in China, which significantly, reduced the exports coming out of China, and that pushed up prices in all of Asia, including India. Subsequently, we also saw intervention by the Chinese government in coal prices, which led to a fall in coal as well as PVC futures, and this impacted prices, which led to a fall, a decrease in prices. So policy is an important factor that we have to keep an eye on. One trend that we are seeing, that is gradually taking place, is a push away from carbide-based PVC and towards ethylene-based PVC in China. because carbide-based PVC is more polluting and less environmentally friendly. And this is being done by encouraging Chinese producers to upgrade their processes and their equipment. And along the same lines, we are seeing greater scrutiny in some provinces, like Inner Mongolia. So there is more scrutiny on energy-intensive processes, like the production of carbide-based PVC, and therefore any expansion of carbide-based PVC plants has been disallowed in the province of Inner Mongolia. Next slide, please. Moving on to another very important market, let's look at some of the trends in the Indian market this year. This year has been characterized by tight supply right since January, and this is because of the drying up of material from the US and from Europe that used to regularly come into India. But we've seen very little of that this year. Domestically as well, there have been not too many expansion projects planned for this year. Another trend that we've been seeing gradually taking place in India is the shift away from PVC to PE pipes, particularly because PE, despite a very recent drop in PVC prices, PE still remains much more competitive. And we can see from the chart on the top that since September 2020, PE has been a lot more competitively priced than PVC. So it is a gradual trend that we've been seeing. However, having said this, India is still a large importer of PVC, and 46% of the total PVC that was consumed in India this year was imported. And of course, as of now, the focus remains on Asian origins such as Japan, South Korea, and China. So we can see from the bottom chart that imports were relatively high in March, April, and May. And this was because a domestic producer had a turnaround going on during that period. But between June and August, we saw that there was a lull in imports, and this was basically due to a couple of factors. Or the monsoon season was on, as well as there were lower operating rates at pipe processing facilities. So this led to less imports during this period. Next slide, please. Yeah. So now let's look at the evolution of PVC prices since 2020. In mid 2020, prices started to increase slightly. This was because of rising feedstock costs, like ethylene prices were higher, and also there was stronger demand. After some of the COVID-19 measures were eased. Then looking at around August to September 2020, there were a number of turnarounds going on, Asian plants as well as Russian plants, where so we weren't seeing supply from there. European demand was quite healthy for PVC because construction activity was very good in Europe, and on the US side there was tight supply due to Hurricane Laura. So that continued, so prices continued to go up. And in November 2020, we saw prices double since July. So the price increase was sustained. Now skip to this year. Around April of this year, we started seeing some softening of PVC prices. And this was because there were lower operating rates at some of the pipe manufacturing facilities, so downstream demand slowed. But this didn't last very long, only until after the monsoon season, when demand picked up again in September, October. And there were not only there were limited deep sea cargoes coming, and there was also restocking going on, so that started to pull prices up a little bit again. And in late August of this year, 57% of the US PVC production went offline because of Hurricane Ida. So not only are we seeing good demand, we're seeing tight supply, so that's pushing prices up further, until prices peaked in October this year, when the dual control policy came into effect. And so this severely limited the exports coming from China, because there were shutdowns, production rates were reduced, so we weren't seeing too much Chinese material come into India. But subsequently, in early November, we saw an intervention by the Chinese government, for to regulate coal prices, and they did this by setting coal price targets. They did this by checking illegal storage of coal, and all this led to a crash in coal futures as well as PVC futures. And as of now, the sentiment is quite bearish in India. We're seeing very weak sentiment and much lower prices than we were seeing a couple of months ago. Next slide, please. So, PVC has had a very turbulent time over the last year and a half. But the big question is, where do we go from here? What is the outlook for PVC in 2022? So going forward into 2022, we will see some, the tightness that we have seen in supply so far. It will ease, especially from the US, because we're getting this indication because this year in October the production rates at US plants were the highest that they have been since January this year. So we are seeing supply slowly coming back. Of course, US exports coming to Middle East, coming to India will be a little bit later into 2022, because domestic US PVC demand is very strong, because construction activity is very healthy. And of course, after the local market, they will be looking at Latin America, then Europe, and then the Middle East and India. So we will see some time lag between, until we start seeing some imports coming in from the US. And supply levels are will move towards normal levels after that. So that is on the cards. Another reason that we will see supply ease is that some European plants like Chem1 are back from turnarounds, so European export prices are also likely to soften. And of course, going into 2022, like you can see in the chart at the bottom, the blue represents new capacities, and we do see a lot of new capacities coming in for PVC, all over in the US, in China as well. So we will see, better demand, better supply. On the demand front, historically we have seen that demand picks up in January in India, so we will see improved offtake of pipes. And this year we had a good monsoon, so there will be demand that will pick up as we go into 2022. So with having said that, with better demand but also improved supply, I think next year we will see better supply, and some kind of correction in prices going forward into 2022. Thank you. That's about it from me for PVC. And Malini, over to you.
Thanks, Damini. So let's now turn our attention to ABS, nylon, and polycarbonate. And as we head into 2022, markets for all of these polymers are in various stages of transition, moving away from the record high prices to this phase of price corrections. So in the case of ABS, as you can see on the graph here, prices are still running well above the 2015-2020 average. In fact, the average price for January to October is around 10% higher than the 5-year average, and 50% higher than last year's average price. Another interesting thing that you can see here is that the spread between ABS prices in Northeast Asia and India has widened. The two markets are still moving in line with each other, but India, which relies heavily on imports, has become more expensive, with prices in October nearly about $150 higher than Northeast Asia. So what's been happening in the ABS market? We found that starting from the second half of last year, demand started to steadily increase with a strong pull coming in from the key end markets. So that is appliances and auto. These two segments account for a bulk of the ABS total demand. And this trend continued into 2021. Heading into February, again, as with the other polymers, the ABS market was also hit by disruptions in production caused by the polar storm in the US. And in addition to this, there were plant outages, force majeures, also a shortage of additives, which has affected output of some grades of ABS. So while supply has been a constraint, what we've also started seeing this year is some easing in demand. And this is mainly because of the chip shortages that has affected production at the auto companies. So this easing in demand has to an extent pulled down ABS prices in October and also in November. But we also have to remember that there is a cost push to an extent coming in from the rise in the crude oil prices. And additionally, this logistics issues that both Veena and Damini refer to have yet to be fully resolved. So if you go to the next slide, let's take a closer look at the cost push that the ABS producers have been experiencing. So the graph on the left is a view of the percentage change in monthly prices of ABS and its raw materials, so styrene, acrylonitrile, and butadiene. You can see here that from July of 2020 to March of 2021, prices for all of these products were posting monthly increases, only exception being the month of January and December, where we saw a decline in prices. You will also see some very steep, and by steep I mean double-digit increase in the price of acrylonitrile as well as styrene and butadiene. So there's certainly a cost push coming in for ABS producers. Post-March, the scenario has changed with the moderation in the increase in feedstock costs. And in fact, what we are seeing also is some decline. Given this picture, let's look at the second chart, which shows the margins for ABS producers. The line in green is for the standalone ABS producers. These are the producers who need to buy in all of the raw materials. And the line in blue is the margin for the integrated producers. And here, in this case, I've taken the example of a producer integrated from naphtha to ABS. So as is evident, margins have certainly been comfortable. They're running above the 5-year average levels. And although in recent months, they have come down from the peaks that were experienced in the fourth quarter of last year. This to an extent then reflects the challenge that sellers face in a market where demand is not as strong as it used to be. So what is then the outlook for next year? It'll be interesting. Next year will be interesting for a number of reasons. So if you look at the feedstock side, styrene, the main raw material, Asia, led by China, will be seeing a number of new plants starting up. Many of these are due to take place at the end of the year, although some delays cannot be ruled out. This additional volumes will have an impact on the demand and supply for styrene. What will then be critical is the energy cost. So if oil, naphtha, and benzene costs remain high, then that could offer some support to styrene, which on paper looks like it will be an oversupplied market next year. As for the other two raw materials, both butadiene and acrylonitrile, these are expected to see a better balance in demand and supply next year. So our forecast is that the average price for both of these chemicals will be lower than 2021. Turning to supply of ABS, markets in US and Europe are still short, and they're likely to start 2022 with the same situation. So Europe especially has been hit by low level of imports because of the logistics issues. So until this gets resolved, the Asian surplus will have to find a home within the region. Now, to add to this pressure, China is making also significant additions to ABS capacity. In total, around nearly 1 million ton of capacity is due next year. Again, like styrene, delays cannot be ruled out. But even if most of these plants start production by middle or the second half of next year, the market is likely to be well supplied. unless there are some unforeseen disruptions to production. That then makes the demand side of the equation quite critical. And as explained earlier, we've already started seeing this moderation in demand from the sharp growth that we experienced in 2020. The shortage of chips continues to impact auto production globally. Many car manufacturers are running at reduced rates or have shut down, and a recovery is not expected until mid, and in some cases, some auto companies are even forecasting until the end of 2022. Earlier this year, we also saw power shortages in China affect output at the derivative units. So while this situation has now been resolved, we cannot rule out the re-emergence of this kind of situation next year as China moves towards balancing its energy requirements with commitments that it has made to reduce energy consumption, energy intensity, and carbon emissions. Last but not the least is the impact of product substitution. So with ABS prices being at such an elevated level, we have been hearing about converters looking at alternative plastics such as HIPS for certain applications. So if ABS prices continue to remain high and the differential remains quite wide, this trend will persist heading into next year. So turning to nylon, the markets here have been hit by both feedstock and supply issues. And as you can see on this graph here, nylon 6 and 6.6 this is average prices from Jan to October. That's about roughly about 45% higher than the 5-year average. Once again, the auto industry, which is a major end user, has played a role, first in pushing up demand, and then more recently, the easing in demand because of the chip shortage. This, however, has also coincided with some production issues for nylon, and also an upward pressure coming in from rising production costs. So what we're seeing now for the rest of Q4 is ample supply of nylon 6, supported by a balanced situation in the upstream caprolactam markets. At the same time, there's also some cutbacks that are being made to nylon procurement by the buyers, and this is as a result, making the overall availability to be much better than before. When it comes to nylon 6.6 though, the supply is still snug, not as tight as what it was before, but again, it has not gone back to the situation it was before the pandemic. This is mainly because some consumers reducing the offtake of their material. Overall, though, the market sentiment for both nylon 6 and 6.6 is a bit cautious, and the views are quite mixed over here on what the next few months or even 2022 will look like. There could be an upward pressure coming in from prices given the higher cost of production. And on the other side, you're going to see a slightly slower demand kicking in. And this has to be weighed in terms of the supply situation, where nylon 6.6 is going to remain tight through 2022. Globally, nylon 6.6, HMD and its raw materials, HMDA and ADN are still very tight, and these tight conditions will last until new capacities come online over the next 2 years, most of this capacity coming in Asia. So moving now to polycarbonate, prices have fallen from the historic high that we saw in April this year. The Jan to October average, though, is still running about 40% higher than the 5-year average, and 50% higher than the average price for 2020. The second chart shows the month-on-month percentage change in prices. And you can see here that there's been double-digit hikes posted from September to November of last year, as well as in February, March, as well as in August of this year. So what have been the key price drivers? As with the other polymers, polycarbonate markets also started 2021 on, with supply remaining quite tight, and this then was aggravated with the winter storm in the US. Additionally, there were also plant maintenance shutdowns. On the demand side, chip shortages, of course, again, has affected auto production. We also saw China's energy consumption restrictions affecting the operating rates of the downstream units of polycarbonate. Now, polycarbonate producers have been struggling with high BPA costs, and I'll get to this in my next slide. But before that, I'd just like to highlight here that the logistics issues, high freight rates, container availability, all of this also playing a big role in shaping the polycarbonate market. So now the recent easing of polycarbonate prices offers some hope to buyers. So prices in October have fallen by about 12% from the April peak. This trend has continued in November. Prices last week have gone down to as low as $3,075. The key question now for buyers is whether this downward momentum can be sustained. And before I get to that, one of the key risks that I'd like to point out is, and a risk that needs to be closely monitored, is the spread between polycarbonate and bisphenol A prices. So as you can see on this graph here, this spread has been running below the $900 threshold level since January of 2020. So it has averaged about $491 during Jan to October. And this has resulted in squeezed margins, especially for those non-integrated polycarbonate producers. So turning now to the outlook, overall, there's plenty of capacity available in Asia. The average industry operating rate in China is only hovering at around 65%. We've got 3 new plants that are due to start soon. And one of these, the Sinopec-SABIC joint venture, has already started up their feedstock unit. So, this is in preparation for the startup of their polycarbonate unit. Also, many of those constraints that we saw in availability from the US, that's easing now. So export volumes are growing, and US exports of polycarbonate in September actually rose to their highest level this year and are even about 12% higher than September of last year. So this increase is a sign that the local output is continuing to improve after all of those months and months of plant disruptions and supply tightness. Turning to demand, the outlook is mixed because, as you heard with nylon and with ABS, the operating rates at these end-use plants, such as auto, will be key. And that then will influence the run rates at the converters and therefore then influence demand for polycarbonate. The price direction of bisphenol A will be critical in determining the operating rates of the PC plants. Bisphenol A prices have recently fallen. They're now at a 34-week low. And this is a reflection of the weak pull that is coming in from polycarbonate. But I should remind you here that it's not just polycarbonate demand that influences bisphenol A. Bisphenol A is also used as a raw material to make epoxy resins, and epoxy market has been quite healthy, and that is in turn going to be providing some support to bisphenol A. Additionally, we also have to keep an eye on the recent rise in crude oil and naphtha prices. So to wrap all of this up, as you have heard from Veena, from Damini, and from what I have just detailed about ABS and PC, ample supply with new plants that are due to start up in the fourth quarter and 2022. So if these plants do start up on time, that's going to have result in a significant improvement in the supply situation. Nylon, we've got to wait a while, until the new capacities come online. The PVC supply tightness in the US is easing with the rise in plant operating rates. Exports of US PE are expected to improve from the first quarter of next year. There's a fragmented recovery in PP demand, and some segments are expected to recover faster than others. When it comes to the engineering plastics, I think chip shortages and their impact on auto or even electronics industry, that one needs to be monitored. And last but not the least is the rise in overall energy prices, and therefore the feedstock costs and what impact this is going to have on producer margins. So that kind of wraps up the presentations. Some of you all, I notice on the Q&A box, have already asked about a copy of the slides. If you all can scan this QR code that you can see on the slide here, that'll take you to an email address where you can give your details, and we'll get back to you with a copy of the slides. We have about, we're already running over time, so we have like maybe 5 to 10 minutes for taking some questions. But I've also included our email addresses, and you can always reach out to us separately if we don't have time to get to your questions today. So Veena, Damini, maybe I can pick up some questions over here that have been posted over here. Okay. Veena, this one is on polyethylene and polypropylene prices. You discussed about how prices in other countries apart from Southeast Asia are higher than India. So the question being, how relevant is it then for Indian producers to look for export opportunities in this non-Southeast Asian countries? And is it something that they are looking at?
Actually, it's a very valid question. In fact, it's not something they're looking at. It's something that they're already doing. In fact, some of the bigger producers in India have had very good exports to Latin America, to US since earlier this year, because that market was so tight, and India was there sitting on a lot of PP available. Polyethylene as well, but definitely PP. India makes a lot of PP. So, and they had a ready set of buyers in these markets who were ready to pay a very high premium to source material from India. So this was definitely the case in the first half of the year. The second half of the year, logistic issues were so widely prevalent and widespread that as much as the potential or a very attractive market and a set of buyers existed, they were not able to capitalize on it because it was hard to get hold of containers, hard to get the shipment issues sorted. The voyage time became too long for them to, consistently move material out to some of these markets. Having said that, parts of Africa, Turkey have definitely been markets that Indian PE and PP has been flowing to. And I think it will probably become a norm now once the freight issues ease.
Right. Thank you, Veena. Damini, there's a question around new PVC capacities. Do you offhand have an idea on where these are where they're coming up in 2022? I think you mentioned China, right? There's some
Yeah.
addition.
Yeah. So the majorly new PVC capacities will be in China, in the US, and also a small, some capacity in Indonesia. So the largest chunk of new capacity coming up would be from Shintech in the US. And in China, there are a couple of plants, some in Shaanxi, and in Indonesia is Sulfindo, is coming up with some new capacity. So primarily the US, China, and some small part in Indonesia.
Okay, thanks, Damini.
No problem.
There's also a question on these BIS standards, and what impact is that going to then have on exports of PE and PP to India? Veena, are you hearing anything from the market?
Well, as of now, not so much. Perhaps there will be a lot more talk around it maybe in Jan. Right now, a lot of things are really not clear, right? Because there are these whole sets of processes that need to be completed to be certified. And this standard is going to apply not just to importers, even exporters outside of India who sell to India. It's also going to apply to local producers. Although it may be a tad easier in the local producers getting their certification first, because it involves certain plant inspections and checks which may happen earlier for the local producers. But I do not hear anything in particular or any particular trend that we see in terms of exports for PEPP. India remains a very big market. As long as the price is right, Middle Eastern sellers will always have an allocation to India to sell to. And once US is back in the game, once US exports resume, then and then India will have to see a lot more PE coming their way, because the Middle Eastern sellers will then have to compete in terms of volumes with with US eating up some share of their markets, right? Markets like Africa and Turkey are sizable markets for US PE material, and once US PE starts flowing into these regions, it is going to displace some amount of Middle Eastern PE. And should China stay slow, or consumption see some kind of a lack of uptick immediate term, then where is that Middle Eastern PE, where is it going to go? It will have to come to India, because you need to have enough volumes to be placed in a region. So I don't see any threat to Indian PE or PP material coming in from the outside. I think it'll do with how US exports play out.
Yeah. And I think maybe we saw this BI standards also being introduced, I think it was caustic, right, a couple of years back, where it took a few months of adjustment where everybody had to kind of, register and get their product approved. But eventually then the trade flows kind of settle in. There are a couple of people who have asked about logistics, which has been a big disruptor this year. And when is the situation going to ease up? Maybe I'll just share what I'm hearing first, and then Veena, Damini, if you can also, share what you are getting from the market. Essentially, I think, when this issue really started coming up, I think it was probably around September, October last year that people started taking notice of this almost steady upward creep in freight rates. I remember at that time we were talking to a lot of people, and they said that by April, May of this year, things will settle down. But as we're well aware, freight rates have continued to remain quite strong, and what appears to be happening is at least it appears to be peaking, but at the same time it's not really corrected as much as the market would want. I think opinion is still very divided. Many believe that it is going to take a lot more time, at least more than even 6 months, for freight rates to moderate or get back to the levels, the pre-pandemic levels. And there has to be a significant stability in the overall trade, also countries not going back into pandemic-induced lockdowns and therefore disrupting supply chain. So there has to be an element of stability in the global supply chain before that gets reflected then on logistics and freight rates. Veena, Damini, anything to add from your side?
Actually, it's a guessing game now when freight we will start to improve, but somewhere people are pegging it somewhere to mid next year onwards. We should see easier movement because it has to do a lot with the vaccination rate targets, because then
Yes.
that is directly tied to how much do we see restrictions easing in different parts of the world, and how easy it is then for vessels or cargoes to move in and out of ports. So people were optimistic earlier, and then now we see this new wave of lockdowns in Europe, which then makes us go back and think, this mid 2022, is it a realistic target? Is it something that's going to be possible? Because the recent developments in Europe seem to have changed the game a little bit.
Absolutely right, and that's a key risk, I think, even from a demand perspective. Damini?
I think you've pretty much covered it. Nobody really knows. But from what I hear from the markets is that the kind of crazy increases that we were seeing in freight rates maybe a couple of months ago, we are not seeing those as much now. Of course, prices are still very high. Freight costs are very high, but they seem to have stabilized, or even corrected slightly, especially for routes like China to Europe, China to the US. Some regions that like the Middle East, which I cover, it's still extremely difficult to send cargoes from major export markets like South Korea, Japan. It's extremely difficult to get containers. So it's still very difficult, but I think, like you mentioned, we have seen the peak, and it should get better from here, going forward. So yeah.
Thanks, Damini. There's still many more questions. And in fact, I can also see some people a bit disappointed that we did not cover nylon in PA6 and PA66 in greater detail. As I've said, our email addresses are given here. So please do reach out. Happy to have a conversation around PA6 and PA66. I'd also request the organizers that if you can share the questions, then we can look at responding to the people via email. But as we are kind of running out of time now, I would once again like to thank everyone for patient hearing, and I hope the session